Listen to me, because this is the most important conversation you are going to have about your retirement this year. We are in 2026, and the landscape has changed. For years, I have been telling you that the greatest threat to your retirement isn't just a stock market crash, it's the Internal Revenue Service. You have spent 40 years saving, putting every cent you could into your 401(k)s and your IRAs, and you've been told you're doing a great job. But here is the fear that should be keeping you up at night: you don't own that entire account. Uncle Sam is a joint tenant on your retirement, and in 2026, he might be looking to take a bigger piece of your pie than you ever imagined. You see, many of the tax cuts we relied on for years have shifted, and if you are retired or about to retire, you are entering the most dangerous tax zone of your life. Why? Because when you were working, you had a paycheck. You knew exactly what was coming in and what was being taken out. But in retirement, you are the boss of your own payroll. You decide when to take money out of your traditional IRA, when to trigger Social Security, and when to sell that stock. If you make one wrong move, you could accidentally push yourself into a tax bracket that strips away your hard-earned wealth. People ask me all the time, "Susie, what bracket am I in?" And I tell them, the answer isn't on a chart, the answer is in your choices. You might look at the 2026 numbers and think, "Oh, I'm only in the 12% or 22% bracket, I'm fine." No, you are not fine. Because in retirement, there is something called the tax torpedo. This is the fear that you need to understand. When your income hits a certain level, suddenly 85% of your Social Security benefits become taxable. Then, your Medicare premiums, Part B and Part D, they go up because of IRMA surcharges. So, your official tax bracket might say one thing, but your effective tax rate, what you actually feel in your pocket, could be double that. Do you understand what I am saying to you? If you are sitting there with $1 million in a traditional IRA, you don't have $1 million. If you are in a combined 25% tax state and federal bracket, you have $750,000. The rest belongs to the government. And in 2026, with the way the brackets have adjusted for inflation and the expiration of old tax laws, the margin for error is razor thin. So, here is the question you must ask yourself today: am I tax diversified? If all your money is in tax-later accounts, you are walking into a trap. You are at the mercy of whatever the government decides the brackets should be 5, 10, or 15 years from now. And let me tell you, with the national debt where it is, do you really think taxes are going down? I don't think so. You need an actionable takeaway right now. First, look at your 2026 brackets not as a goal, but as a limit. You must stay under the thresholds that trigger the taxation of your Social Security. This means you need to be looking at Roth conversions. I have been screaming this from the rooftops. You want to move money from your forever taxed accounts into never taxed accounts like a Roth IRA. Yes, you pay the tax now, but you pay it at today's known rates, rather than tomorrow's unknown rates. Second, you need to understand the difference between your marginal bracket and your effective rate. Your marginal bracket is what you pay on the very last dollar you earned. But your effective rate is the total hurt on your entire nest egg. If you are about to retire, you need to sit down with a tax pro, not just a math guy, but a strategist, and map out your withdrawals. You should be taking some from taxable, some from tax-deferred, and some from tax-free accounts to keep your reported income low while keeping your lifestyle high. Don't you dare wait until April of next year to figure this out. The 2026 tax brackets are already live. The numbers are set. You need to know if you are single and making over $100,000, or married and making over $200,000, because the cliffs are steep and the fall is painful. I want you to be powerful. I want you to be secure. But you cannot be secure if you are ignorant of how the IRS views your retirement. You worked too hard for this money to just hand it over because you didn't understand a bracket. Stand in your truth, look at your numbers, and take control of your tax destiny today. Because if you don't care about your money, I promise you, the IRS will.